Hey guys, John Paulamy here, Actionable Intelligence. Today is Sunday, August 23rd, 2020, and this is the weekly market update. So, the first thing I wanted to talk about was the California blackouts. I'm not going to sit here and dunk on the state government there and the policies they've pursued. I will point out several things, though, that I think are interesting and have repercussions for the rest of the country and for speculating. The first thing I wanted to point out here was a quote by Upton Sinclair. He was an author. He wrote books like at the beginning of the 20th century. He was, I believe he was a socialist. I believe he was big on workers' rights and labor unions. He wrote The Jungle about the meat packing plants in Chicago and what went on there. But anyways, he had a quote, and I like to put these quotes in sometimes because they kind of get us to think and reflect on some things. So I'd like to keep this quote in mind when we're talking about some of these items. It is difficult to get a man to understand something when his salary depends upon his not understanding it. So this is, the folly of, cognitive dissonance, various biases that people allow to have in their mind, their ego, their inability to admit when they're wrong and course correct. We see it, you can call it hubris, you can call it many things. But I just want to keep that in mind when we talk about this. So there were rolling blackouts in California when the system operator, and that is that's not a utility agent, a utility or anything like that. It's a state agency that controls the grid. Okay, so they get inputs from all the plants. They know from substations. They know what the demand is. They model these things. And so when they realize that the amount of demand for power was not going to be able to be met by supply, they had to institute rolling blackouts. So they contact the various utilities, and then they black out various areas and lower the demand sufficient to the supply being able to match the demand. If they don't do that, then you could have a collapse of the entire grid. So obviously that causes a lot of problems for the consumers, especially in a heat wave. People relying on air conditioning, elderly people. We talk about global warming and all these other things, but more people get, I think, die from heat illnesses during these heat waves than die from like cold exposure. But that's another subject. So basically, there wasn't enough power. There was a heat wave. These things happen. It's summertime, and the other methods that the California Grid Authority had used to balance the grid by importing power from neighboring states wasn't available to them because the whole western part of the country was in a heat wave, and they didn't have the ability to do that. So they had the rolling blackouts. Now, what's interesting, and I'll put links to the articles that I referenced for this discussion, and they're not right-wing. I mean, it's San Jose Mercury. So the grid operator, if you read the article, people that run the grid are people that are professional people. They're not all necessarily political appointees. They're engineers. They look at facts. 2 + 2 = 4. But even, if you're in a state like California, you don't rise to the head of those organizations without being thinking correctly. Let's put it that way. So they had been warning the state leadership that it was inevitable that with the rise in intermittent green power and the shutting down of nuclear plants and natural gas-fired plants, which has happened, and not replacing them, that at some point in the future, and they said 2020 looked to them based on their models could be the year that they would be in a situation just like they ended up. And that's in fact what happened. So there's various items in the article, but it basically sums up what happened. I mean, they've been shutting down the natural gas plants that are basically your insurance policy. If you have the intermittency of renewables, which are now 33% of the California state grid, they've met their requirement that they wanted to have there 2 years early. But in the they've also shut down a lot of the natural gas plants that can ramp up quickly when the renewables can't deliver the requisite power. And, that's what they're going to continue to do. They shut down the San Onofre plant. The Diablo Canyon's scheduled to be shut down, and there's no replacement for these huge baseload nuclear plants that supply millions of people reliable electricity. And so, here's a quote from the article. "We have a much more risky supply of energy now because the sun doesn't always shine when we want it, and the wind doesn't always blow when we want," said Frank Woloch, a Stanford University economics professor who specializes in energy markets. "We need more tools to manage that risk. We need more insurance against the supply shortfalls." So, I've been saying this, since I've had this channel. There's intermittency with wind and solar. The sun goes down at night. Irradiance peaks at a certain time of the day and then goes down until it becomes dark. And I've had people get on here and actually argue with me. There's nothing to argue about. The facts are the facts. The sun goes down at night. The wind doesn't always blow. But the demand for electricity is stable. They model it. These are engineers. They're not, they're just looking at the facts. But in this, it's kind of almost like, it was in Soviet times. In order not to be put into a mental institution or the gulag or be ostracized from society, you had to say 2 + 2 = 5. And so we continue on with the fantasy that we're going to have 100% green energy by a certain point in the future, and it's just simply not going to happen. And what is going to happen is to continue to have situations like this. You're going to have blackouts because the sun doesn't always shine and the wind doesn't always blow, and the grid operator can't match, the demand with the supply if the supply is intermittent and not reliable. That's just the facts. So solutions were talked about. One of them was building more gas plants as insurance. You can build a simple cycle aeroderivative LM2500 or LM5000, and you don't even have to be there at the plant. You just have it sitting out. It's basically in a container, containerized. It's all self-contained. The lube oil, the fuel is hooked up, the gas, whatever, and the grid operator or the utility can get a dispatch order from the phone call basically on the real-time desk, say start unit whatever. They just push a button at the real-time desk at the utility and it sends telemetry out to the unit, and the unit starts up and puts itself on the grid. And a simple cycle machine like that can do that in minutes. So they're able to, as say clouds come over or the wind dies off, that's how they're able to manage it. But that costs money. And then it also begs the question, why even have that piece of machine sitting there with not being used all the time, but only being used when the sun goes down or when there's a mismatch between the renewables and the demand? But that's a different question. So basically, as I stated earlier, 33% of the state's electricity now comes from renewable sources, a requirement for utilities under state law that had been met 2 years early. So basically, the article goes on and says, people turn on air conditioning and other devices around 5 p.m. as the heat peaks and they come home from work. Electricity demand surges just as the sun is setting and solar power is drying up. So, that's the problem, right? The demand goes up, but the supply goes down. And then, here's the solution. 1 million Californians have now put solar panels on their homes. A growing number are installing battery systems, like Tesla's, which cost about 10 grand. More incentives should be offered for those, he said. They were talking about one of the people that had an answer for this. And laws changed so residential battery power can be sold back to utilities when supplies are tight. So we're back to this, technological solution. The solution is put more solar panels on people's houses, incentivize that, and have more battery packs. But, as I've discussed before, I'm not going to get into the merits of whether it's going to happen. This stuff is going to happen. Where are you going to get the materials for all this? It doesn't change the fact that the sun goes down. The irradiance is the, basically the amount of photons that are hitting, the amount of sun energy that's hitting the panel, okay? And it peaks at a certain time during the day. It starts off low when the sun comes up, gets to a peak and then starts going down as the sun begins to set. So you're actually never at full production. I mean, the standard test power, whatever the assumptions are, is like 100 watts per square meter of solar panels. So there's a whole bunch of issues if you really deep dive this and understand how this technologies work. It's not, just a matter of putting more panels on people's houses. But that's what they're going to do, because, as I said, people aren't going to change their view now because, they had a couple blackouts. It will take many blackouts over a period of time and a lot of disruption before people say, I've had enough of this. This isn't working. When I interviewed Malcolm Rawlington about nuclear power, one of my first interviews on the Actionable Intelligence Alert interview series, we talked about this. I said, what would it take? What, in your mind, this is a guy in nuclear business for 50 years as an operator and working in plants. And, he said it very simply. It's very simple. It's going to, when the lights go out, then people will say, this isn't working and we need something to do something else. I mean, you have these huge nuclear plants in California that were built when the California political climate was a lot different than it is now, 40 or 50 years ago. And they're being shut down now. I mean, one was shut down, I think, several years ago, and they weren't replaced because the zeitgeist is to go to 100% renewables. So that's what we're going to do. But this is what happens. If you can't import hydropower from Washington, if you can't import coal-fired power from Arizona or Nevada, because they're in a heat wave also, then you're going to be up a creek without a paddle. And that's what has happened. So how can, this is kind of like how a third world operates. I mean, you'll be sitting in some of these third world countries that I've traveled in or lived in, and the lights just go out, and you have no idea when they're coming back on. I mean, it's very disruptive when you're trying to be productive during the day. And, if this might just be a one-off, but I suspect it won't change. They're going to continue on and just continue to do what they're doing because that is the zeitgeist. That is the current political climate. And like I said, productive people are leaving the state, not just because of this, but this is just another reason to leave, right? So I think heads we win, tails we win even more. I mean, if they want to build more renewables, then we will be invested in the companies that supply the materials to do that. Copper, cobalt, nickel, all those rare earth metals that are needed. If they want to build nuclear plants like the rest of the world's doing, then we will get them on the uranium side. So I just like pointing this out because it's interesting to see, and you can see the nuanced speaking of the grid operator people, right? They know why there was a blackout, but they have to be careful. They just say, hey, this isn't going to work, and we need to build up some natural gas backups, and the ratepayers are going to have to pay for that as an insurance policy, just like you have fire insurance or health insurance or something like that in case something catastrophic happens. We can play these little games with putting solar panels on everybody's house and putting a Tesla battery in everybody's garage, but that ain't going to cut it. And if you guys want to do that, that's fine. But if you want to have 100% 99.99% reliable electrical, then we're going to have we're going to have to put these gas turbine plants off in hidden areas where nobody can see them and flip the switch when we need them. Then we can all live in the fantasy world. I don't know where they're going to go with it. Speaking of solar panels, this is something I've been seeing more of. As I've said before, renewable energy is not really renewable. Or let me qualify that as I normally do. The sun will be around for about another several billion years providing energy. The amount of energy that hits the earth every day is enough to power, the earth for thousands of years. It's just the inability to capture it efficiently. One of the ways we do that now, the main way we do it is through solar panels. But the problem is solar panels don't last forever. UV radiation, they break down over time. Heat and UV radiation work their magic on it. It's called entropy, right? And they lose their ability to generate over time. Every year they lose a little bit more. Plus you have the UV rays just breaking down the materials internally over time. So at some point they're not worth having anymore. So now you have to deal with it. You have to dispose of it. you have to, you know, recycle, right? Or that's what people think. But it's not just like standing on a pop can, stepping on a pop can, and taking it down to the recycling center. The way that these things are manufactured and the way that they are, and with some of the materials that are used, doesn't make it that easy. So this is from an article talking about the problems that we're getting ready to have around this. You know, we have this fear of nuclear power, this perception of nuclear power that it's dirty, that it's dangerous, that the waste products can't be controlled, and that it's a problem. But when you start looking at some of these waste problems, this boggles the mind. So this article was saying, talking about solar panels, they are complex pieces of technology that become big, bulky sheets of electronic waste at the end of their lives. And right now, most of the world doesn't have a plan for dealing with that. Now, this is from an article from Wired magazine, which is not a right-wing, anti-renewable energy magazine. The article goes on to say, by 2050, the International Renewable Energy Agency projects that up to 78 million metric tons of solar panels will have reached the end of their life, and that the world will be generating about 6 million metric tons of new solar e-waste annually. Now, just remember, we don't have a plan right now to deal with this. Article goes on, solar panels are composed of photovoltaic cells that convert sunlight to electricity. When these panels enter landfills, valuable resources go to waste. And because solar panels contain toxic materials like lead that can leach out as they break down, landfilling also creates new environmental hazards. 78 million metric tons is going to reach its useful end life by 2050, and we don't have a plan what to do with these things. Now, again, people are out there, it's in their mind right now. John, what's the problem? We'll just recycle them. Well, not as easy as you think. They are not easy to recycle. That's just the problem. And the article goes on. A recycler taking apart a standard 60-cell silicon panel can get about $3 for the recovered aluminum, copper, and glass. Meanwhile, the cost of recycling that panel in the U.S. is between $12 and $25. So you can get $3 from the materials you recycle, but it costs you between $12 and $25. That's after transportation costs, which are additional, which oftentimes equal the cost to recycle. So you could be anywhere between $25 and $50 to recycle a panel when you get back $3. So this is one of the things that advocates of renewable energies, or I wouldn't say not necessarily advocates, but zealots, say that the fossil fuel industry, which we rely on now and enables civilization, gets all these subsidies and has a lot of externalities. The costs of the use of these things are externalized over the whole population and aren't accounted for in the cost, in the levelized cost of the use of the fossil fuel. Well, here's an example right here. Is this when you sell a solar panel, the way to do this would be say, okay, it costs this much to recycle it. You have to pay that now, and it goes into a trust fund so that at the end of the life, when you are no longer in business, or you're dead and buried, or your business is shut down, or whatever, that somebody is going to be accountable for, instead of just crushing this thing up and dumping it in a local landfill, or even worse, which happens a lot now with our electronic waste. We crush it up, put it on barges and ships, and send it to Bangladesh, Pakistan, and places in Africa where they burn these things in the open air to extract the valuable materials. That's what goes on now. It very well could be that some advanced recycling technology will come and lower the cost. Maybe as the volumes go up, the cost will go down. But right now, that's what it is. And it has to be taken into account. But it's not, of course, because the political has infested everything, and we are on this goal to do these things, and we're going to do them. So what I think is, this is an opportunity for an entrepreneur. This is another opportunity for us. We have to look at this, because these things are going to have to be disposed of. They're not going to just dump them in landfills, 78 million metric tons. I mean, that's nutty. I already told you the story about if you drive around in areas of West Texas where wind is very popular, they're doing a lot of repowerings. The machines aren't really lasting 25 years like the original proponents were saying they're going about 12 years, 15 years, and then they're doing what's called a repowering. They put a bigger generator and bigger blades so they can generate more electricity. And then they take the blades and they don't have anywhere to do with them because they can't be recycled either. These big, huge fiberglass blades can't be recycled. So you see them piled up in yards around, not people's yards, but like lay down yards around different areas. And people are working on that solution, but they haven't come up with one that is cost effective yet. So we're creating all of this waste in a so-called renewable business, which isn't renewable, because every time that these panels have to be replaced, you have to go dig up more materials from the earth. Again, we're back to the same old problem that, yes, the energy that's being created by the sun, because wind is also a result of solar energy in the sun. I'm not going to get into that, heat gradients and things like that. But the machines that are used to capture the energy are not renewable. And so you cannot have infinite growth and infinite cycling of this, new machines like this, on a finite planet. So, another thing that's going to have to become, I think, planted in people's minds is that they're going to have to really, this is part of the agenda, I think, is to raise the cost of electricity with these renewables, raise the cost of living, do all these things to force, instead of just having a conversation with people saying we're going to have to downsize, we're going to have to live differently, which people aren't prepared to do. We're going to do it surreptitiously by raising the cost of electricity and energy by using these renewable energy sources. So I just wanted to point this out because I think it'll be an opportunity for entrepreneurs and for us. We just need to keep an eye on it. Somebody will start working on it, I'm sure, when there's that much of a difference. It's going to attract talent to try to solve the problem. But right now, there is not a solution. So we had Valaris decided to declare bankruptcy this week. They had $6.5 billion in debt. This was the former Ensco. Now, I've had several people on comments on this channel. I'm sure there'll be somebody will stuff one in this channel or this video, and also on Twitter. How's that offshore oil drilling investment working out for you? Well, it didn't work. I mean, I can't control the fact that we had a coronavirus that, decreased demand by 20 to 30 million barrels a day, and that was further put upon the oil price, the Saudi and Russian oil spat. So, yeah, I mean, the industry was recovering late last year. That was without a doubt. We were tracking that. And, we had the dual whammies of two black swans hit us. And so now all of these offshore oil companies are declaring bankruptcy. It was Valaris, that's on top of Diamond, which already did, and Noble. And but I think this is long-term bullish for the industry, offshore industry. 28 to 30, about 30% of our oil and gas comes from offshore oil or offshore sources. And there's been, there's virtually no new investment going in there. So what will happen is these companies will, the debt holders, the people that own the debt, will take over the companies. The current shareholders will be wiped out. New equity will be issued. There'll be restructurings. A lot of the rigs that needed to go to the scrap yards and were just kind of being held on the books because people didn't want to take write-downs, those things will go to the scrap yards now. The industry will be slimmed down massively, and then they will emerge from bankruptcy, probably just in time for the recovery that will happen as oil prices go up over the next 5 years, which I'm anticipating is going to happen. So this is the kind of stuff I think we want to see at the bottom. This is really the bottom. This is literally the worst depression in the history of the oil and gas market. But if you look at the BP statistical review, I mean, hydrocarbons aren't going anywhere for the rest of this century. They're going to continue to be used. They're going to be the primary drivers of our energy usage, regardless of what people think. It's just a fact. And if you don't do constant investment, new investment into an extractive resource such as oil and gas exploration and extraction, it's going to go down, and we're seeing that. So there's a glut that developed because of the Saudi and Russian shenanigans and also the coronavirus. That's coming down now, and no new investment is happening. And I don't think that new investment will come on board for a while, even when the price goes up. So I think that, Some people are saying that we are looking at an oil crisis, an energy crisis. I'm not prepared to go there yet, but I think it's very much a possibility. And this industry will be restructured and ready to rock when that happens. I mean, I have a company in my portfolio right now, in the Actionable Intelligence Alert portfolio, that was in a similar situation a decade ago. It was built a big geothermal plant. It ended up bankrupting the company. The debt holders took over, okay, and the equity holders were wiped out. They issued new equity, and now the company has a manageable amount of debt and is restructured and is making money and expanding. This is how things work. So the same thing's going to happen here. Maybe some of these companies don't come back. The ones that do come back will be extremely slimmed down with the best and most efficient rigs ready to go back to work. And you will see investment decisions come back. Regardless of this ESG movement, I suspect that the CEO of BP, Beyond Petroleum, and the CEO of Royal Dutch Petroleum would be singing a different tune if oil was $100 a barrel. They wouldn't be talking about moving into renewables. Okay, so if they're not going to spend the requisite money to replace their dwindling reserves, then that is another long-term bullish signal for me as far as I'm concerned. So if you're an oil and gas company, you should be, you read about Standard Oil and what John Rockefeller used to do during downturns. He would buy his weaker competitors, he would consolidate, and he would make himself stronger for the inevitable, and make Standard Oil stronger for the inevitable recovery. But that's the complete opposite of what we do now. We take on all this debt and expand at the top. Okay, that's what a lot of these companies do because they're incentivized to do that, right? The incentives direct these people. A lot of the incentives in the shale industry were to drill, to show more production, to show more wells drilled, and that's how the executives were incentivized. So that's what they did. As Charlie Munger says many times, show me the incentives and I'll tell you the outcome. Okay, speaking of energy, because our time is running here, this is a corporate insider buy-sell ratio, and the XLE is basically a ETF or an index that tracks pretty much your larger oil and gas companies. But what you can see is that the corporate insider buying is at unprecedented levels of being skewed to the buy. So the people that are actually in the business are, this chart goes back to 2011. I don't have it going any further back because I just got it off Twitter from the Sediment Trader feed. But this is at unprecedented highs. That means that the insiders at a lot of these energy companies are buying their own stock as they see a recovery. Now, that is not a guarantee that you're going to get one, but it's not, that's a positive in my mind. It's more positive than negative. That's another data point that is telling me, you've seen all this moves by these oil companies to go to the renewables. I'm talking about your large integrateds, especially the European ones. And now I see that, and then I see the bankruptcies happening in shale, the articles about bankers not giving them any more money to expand, and I just get more positive when I see this. So I think we're closer, to a recovery than we are going lower. I wanted to point this out as speculators. I've been talking about it a little bit. There's this company, Microstrategy. I'm not really that familiar with it, but this was like a couple weeks ago. They announced that they had purchased like over 21,000 Bitcoins for $250 million. This is part of their capital allocation strategy that they announced. And I just wanted to read what the CEO said, because I think it kind of plays into this and into precious metals and hard assets. Our investment in Bitcoin is part of our new capital allocation strategy, which seeks to maximize long-term value for our shareholders. This investment reflects our belief that Bitcoin, as the world's most widely adopted cryptocurrency, is a dependable store of value and an attractive investment class with more long-term appreciation potential than holding cash. So they're taking their cash and buying Bitcoin. Why? I think it's because people can see what's happening. People that are forward-thinking, people that know what's going on, people that know history and economics can see what's happening with the various mediums of exchange and stores of value, i.e. fiat currencies. They're being debased by all the governments around the world. So that's why you're seeing gold making all-time highs recently, and why Bitcoin is recently traded above 12,000, and why this company is buying Bitcoin. There's no reason to hold cash in a negative interest rate environment. It's losing value. Every time the government and the Federal Reserve create more currency units and spend money they don't have and force the Fed to monetize more debt and create more currency units, the existing stock of currency units loses purchasing power. When you have gold, which can only be increased by 1% to 1.5% a year, or if you have Bitcoin, which has recognized not to be able to be expanded, it naturally has a disinflationary bias to it, people are going to be inclined to look to that as a store of value against what they see irresponsible activities by a government and a central bank. So Microstrategy here has said it recognizes Bitcoin as a legitimate investment that can be superior to cash, and accordingly has made Bitcoin the principal holding in its treasury reserve. Now, I don't know if it's going to work out. I don't know if this is going to be a trend. I don't know. What I'm telling you is it's something to bear watching, because if more people start going here, we could see a big price in Bitcoin. And yes, I do own some cryptocurrencies. I'm not prepared to talk about cryptocurrencies right now, but I do own some. And I have been learning more and more about them, because I kind of like the tokenization of assets anyways as a way to reduce friction and get a lot of the rent seeking out of the financial industry. That's all I'll say about it for right now. So it's already been addressed by a lot of people, but I'll just bring up what Frank Holmes said on his Frank Talks about Buffett buying gold. Said in the article that a quote often gets attributed to legendary investor Warren Buffett, that gold gets dug out of the ground in Africa, then we melt it down, dig another hole, bury it, and pay people to stand around guarding it. It has no utility. Anyone watching from Mars would be scratching their head. But Holmes goes on to say, well, maybe the reason Buffett bought it is because he can see what we've been talking about and what Ray Dalio's been talking about and other smart people, Paul Tudor Jones and others. With so much money being printed out of thin air, many investors have rightfully been concerned about currency debasement, which is the lowering of a currency's purchasing power. The direct result of this is inflation, since the U.S. dollar may not buy as much as it did yesterday. It's helpful to think of inflation as a tax on your wealth. Historically, investors have sought to avoid having to pay this tax by buying real assets, such as land, real estate, natural resources, and yes, gold. Although they don't generate income the way some stocks and bonds do, these kinds of assets can be attractive because they're believed to hold their value better than cash. And if you actually go back and look, I'll put a link to this article, this Frank Talk. He actually has a chart up there showing that gold has outperformed Berkshire Hathaway over the last, I think, at least 10 or 15 years. So I think it's instructive that there are periods when real assets will outperform financial assets and will outperform cash. And I think we are entering a political environment, at least in the West, especially in the United States and Europe, where more, shall we say, populist and socialist policies are going to come into play, and there's no money to pay for it. And so MMT, which I believe is already kind of in effect, not officially, but if certain folks of the Democratic persuasion gain power, then you will see more of a movement towards that. That's my view, at least. All right, that's it for this week, guys. A lot of information there. I will try to cut it up during the week. I just didn't have time this week. But appreciate the listeners. Appreciate you guys coming on board. Got a lot of new people coming on board constantly. Appreciate all the recent people that signed up for the newsletter. This has been the biggest month I've ever had. I just feel like, over the next several years, the wind's really going to be in our sails. And I'm really, really looking forward to hopefully a transition from what we're seeing in the markets to value stocks and value situations. So if you're interested, consider taking a subscription to the Actionable Intelligence Alert newsletter. All right, guys, that's it for this week. Thanks for listening. We'll talk to you next week.